Hi, I'm Peggy, your crypto gal. Okay, so today we got a lot going on out there, but today I definitely wanted to be able to target with you and talk about all these taxes that are going on, what the governments are talking about with it. But I'm going to mainly focus on the US, of course. I'm always picking on my hometowns, but with my country, not because I'm angry or disputable. It's just that they're always looking to find a way to make money, and taxes is the only thing that seems to keep the abroad with the United States. And I mean, it's like you buy something, you're taxed. You want something, you're taxed. You have it for a long time, you're still taxed. I mean, it's tax, 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 tax. I mean, where's the real Robin Hood? And then this is what I love about being able to travel worldwide, because I get to see all these cultural acclaims and what the governments are doing with their countries, even though they're not the specifics. Now I see why people swim through sharks and infested waters and try to cross through the border patrol to get to the United States. But then it's like when they get there, they're like, oh shit, you people really are screwed up. But that's just my personal opinion. So you can still dingle the bell, stay with me on this, and hopefully we can get through this with a big smile on our face. So of course I'm all about the read and research. I always want to try and deliver something to you people so that you can get good information, be able to continue your read and research, because I think it is so important. Every single person is different of what their investment is and where they're going with this. And crypto is big out there. And don't you sit there and think for 1 minute to be blinded with your blinders on to think the crypto's going away, because darling, it's not. It's here to stay. And the thing about that is that the SEC, they're trying to get these regulatories in. And hey, I'm all for setting boundaries. The boundaries are set for the stock markets, and I'm all set for that. I'm set for what is the regulatories going to be. But don't try to kill me on it, and don't try to get my information where you want a piece of my pie, because that's my pie. I made it. I created it. I'm layering it what I want for the mixture to be. And it's my creation, okay? I don't have a problem with the regulatories of it, but don't try and crashing in on it because you decided to turn a machine on, and you now need the middle class people that you're totally destroying to undergo and don't have to take care of the rich, and sure as hell not going to take care of the poor. Okay, so looking at it from a crypto's perspective, this is why so many people are jumping on the pirate ship. That they're okay with the volatility of the market. They know where the drive is. They're willing to take that gamble. If you have the patience to be able to hodl your money and just be a little equal to yourself of not all of your savings. Some people are 100% in, like one of my business partners, Steve Colley from One Global Money, when we had it, he's 100% in. Whereas my other business partner that I had with One Global Money, Paul, he was not 100% in. Me, I'm 80% in on crypto, 20% on still centralized banks. So with that of movement, I'm looking more into the DeFi, which I gave a little bit of a briefing on that, and I'm going to dig more into the DeFi because the decentralized financing on the ecosystem out there is something that we really need to be educated on. We really need to stay abreast with it. You really need to do your reading research on it to stay, because this is the future of where it's going to be for those layers, like I was just talking about, for your piece of pie of where your money can be directed to. Now, taxes for crypto. Tax liability is a major source of concern for so many people that are invested in Bitcoin. Okay, and let's just focus on Bitcoin. Okay. But these other digital assets that are in so many different sums, like I'm into many different altcoins, many different of the coin tokens that are involved in the DeFi system. This is described as nothing short but of a major nightmare that is going on. It's putting the pressure on the countries. It's putting the pressure on investors and levying these taxes of controls on the incomes and the capital gains from Bitcoin transactions. Many are taking different approaches with this. Often what they're trying to do is they're trying to promote a better adoption and innovation within the crypto industry. Okay, I'm good for that. Now, to be at a friendlier legislation level, because they are over there in the government trying to work on this, even in the Biden administration, which has been acceptance to it, is Hester Pierce is knocking down walls, trying to make them see where these regulatories need to lay out and play out in the right factors where people will want to see that they can make this transition in this new fiat currency. This allows investors to buy, sell, or hold their digital assets with no tax liability. Levying taxes on income and capital gains from Bitcoin and other cryptocurrencies is now very common. However, there are several countries that are bucking the trend. Keen to see how this emerging asset class develops and where the innovation is going to lie. It's where these countries will create these tax laws that will be subject to and are often very complex. Well, of course they're complex. You're dealing with the internet, okay? You created this technology of wanting people to be this way, okay? So if that's the way you wanted it to be, then that's the way it's headed. This is the change that has come about with it, okay? When you create something, something's going to progress with it. You're going to have faults with it, and you got to figure out where those faults are, okay? It's like a relationship. You got to figure out the balance between the equalities there. Okay, so now let's take a look at some of the countries that have some of these different tax liabilities of claim. I just kind of want to read a couple of them through with you guys. You can also find a good article with this on Decrypt. I find that they hold a lot of tax information in regards to this. But with these transactions of being for this, it's created a diversion is the word I'm going to use to be able to focus where a lot of people from the United States are moving their money, even their regular fiat currency, they're moving their money of stabilization to other countries. They're able to create their crypto. They're able to see that they're not going to get screwed out of this to making sure that their world is not changed, but yet progressed with regulatories and where they're going to go with these taxes. Belarus, it's taking an experimental approach with cryptocurrency. In March of 2018, the new law legalized cryptocurrency activities in the Eastern Europe state, exempting individuals and businesses involved in them from taxes until the year of 2023. So to me, this is enveloping people to get into it, get comfortable with it, see how they can buy, sell, trade, move it, buy the NFTs, see where their direction needs to be so that they can justify, kind of like your savings account. What are you going to do with it? Because it's not accruing interest. Is it your money market account? But the bank still gets a piece of it, where here the bank is not getting a piece of it. So good for them that they're trying to figure out where this justification is going to be for that. Under the law of mining and investing in cryptocurrencies are deemed personal investments and so exempt from an income and a capital gain, because you have to be careful with those capital gains. This is where the investors are getting eat up alive out there, as I call. The fish are jumping on the boat instead of the fishing angler catching the fish. Germany offers the unique and take on taxing digital currencies such as Bitcoin. Unlike most other states, Europe's biggest economy regards Bitcoin as a private money. It is, as opposed to a currency, commodity, or a stock. Okay, I kind of agree with that a little bit, but it is still a currency. I can justify that, and I am able to see where places to be or where this movement is coming in with Bitcoin that is going to justify this movement and is going to be progressive, okay? Where you will purchase. I mean, literally, I've got friends saying, hey, can you pay me back in Bitcoin? You know, sure. And this is why Amazon, this is why Alibaba are creating these, instead of PayPal and your Amazon card, they're creating this environment with Bitcoin. So you're not taxed on it. You don't have to show the gain for it. And you're not going to have to worry about turning that into your tax person at the end of the year to show a justification of a damn receipt for something that you purchased. It's just like a even swap, okay? Like the way it was back in the early 1800s, 1700s. If you just swapped out with the pasture next door to you, hey, I'll give you a hog, you give me half a cow. I mean, okay, you made the swap, but you weren't taxed on it. I mean, come on, let's be realistic here, people, okay? Now, for German residents, cryptocurrency held for over a year is tax exempt regardless of any dollar amount. In the United States, they have the little checkbox, but yet they are growing further speculations of this to be able to say in the dollar amount, and 10,000 has always been their currency. So what's to stop you to have 9 different exchanges and each one of them be $9,999? Do you see my point? Okay, so these are graduating scales of where this is going to be. Now, in 2021, a controversial new tax law came into force, which effectively killed crypto derivatives trading in Germany as a loss. They can no longer be deducted. The legislation reflects moves across Europe because they're doing the regulatory derivatives. And this is one of the things that Germany, well, even Europe itself, they have taken on with XLM. stellar lumens to help produce into their decentralized finance systems with Uniswap and Aave, and be able to create this mixture of what they can do for the DApps and where they're going to put these smart contracts to be able to develop these regulatory so that they'll know where their money is justified from. One of our all-time favorites, where you always hear you're always safe to have your money in Hong Kong, is moving the justification with that by Special Administrative Region of China with the theoretical autonomy over its own affairs. Hong Kong's tax legislation on cryptocurrency is a broad brush affair, and even after new guidance was issued in 2020, the cryptocurrency are taxed or not, where it depends on the use according to the global crypto leadership of what they're doing with digital assets. It is, if digital assets are bought for a long-term investment purposes, any profits from the disposal would not be chargeable to profits tax. But they also added, this doesn't apply to corporations, okay? So there is a difference where they're going to hold the business investor to the individual retailer. So you just have to be careful where your inlays are going to be out there. And then our all-time favorite out there of what's happening and hit big news is, after looking at El Salvador and the youthful Presidente, that he claims Bitcoin as the fiat currency of exchange in the country, and the first has grown with much respect as other countries wish and look and still yet try to see where they can determine their factors on taxes, that this president has definitely established the legal tender of Bitcoin in El Salvador. The country will reportedly exempt foreign investors from paying tax on their Bitcoin gains. That's according to their legal advisor, as well as the Presidente. He is very, very in deep. He is very on top of this, of reconstructing and making sure that his country is developed of what cryptocurrency is, and focusing on this for the Bitcoin exchange. While legal framework has yet to be put in place around these tax exemptions, it is clear an indication of the country's intention to lure foreign investors with crypto portfolios to come to El Salvador. El Salvador, yeah, I could see this where it would be a definite direct interest for people. Now, here's another one of all-time favorites, and that's in Malaysia. Cryptocurrency transactions are currently tax-free. Cryptocurrencies don't qualify for capital gains tax. The digital currencies are considered as assets or legal tenders by the authorities, where they have the right to be able to come in and regulate what the transactions are, to determine the more of the capital gain, passive or, as I've done occasionally, unplanned, unsystematic, what are they doing with it? So let's say on one of my exchanges, I'm constantly doing a buy, whereas I transfer and do a sell. So they're going to take a look and see where my balance is of equality. There's that relationship clause. Where's the balance of what it's going to be? Businesses involved in cryptocurrency are likewise subject to the Malaysian income tax. You have to be kind of careful there of what you're doing. So if you've got it on as for a payroll system with XRP or XLM, you kind of have to be a little driven. Malta, one of my all-time favorites, definitely will go there. Definitely will set up for a crypto company there, where me and my business partner, Steve, with One Global Money, where we were headed in the beginning. We put the brakes on because we went into the Caribbean because things were shut down due to COVID and we couldn't get there. I'm still going. I am driven. I know Malta has got a lot to offer for me as far as a business asset with this. And when they opened up the doors, the government of the so-called blockchain island recognizes Bitcoin as a unit of account, a medium of exchange, and a store of value. And that's what I'm looking for. The long-held digital currency like Bitcoin, but crypto trades are considered similar to day trading in stocks or shares, and attract business income at a rate of 35%. That's extremely high, but not any higher than what I'm doing in the stock market with my regular stocks of oil, commodities, and airlines. However, this can be mitigated to between 5% and 0% through structuring options available under the Maltese system. You ask what that is, it's the guidelines that have been to discriminate between Bitcoin and its so-called financial institution. It equivalents to the dividends, interest, and the premiums. So therefore, they're not going to come in and try to control it. They're just going to take a look at what you're doing with your books on there. Another one is Portugal. Oh my goodness, heaven above, and lots of good-looking men and beautiful horses. Okay. But anyways, Portugal has one of the most crypto-friendly tax regimes in the world. Proceeds from the sale of the cryptocurrencies by individuals have been tax exempt since 2018. Cryptocurrency trading is not considered as an investment income, which is normal tax of 28% on a tax rate. Right here now, I do a regular tax rate over here in the Caribbean, specifically being Dominican Republic, is 23%. And everywhere you go of anything that is a service of collection is 18%. Businesses that accept digital currencies as a payment for goods and services in Portugal are liable to an income tax, okay? So no different than what we're doing over here in Dominican. Okay, another good time all favorite is Singapore. What a beautiful country there of its equalities. Capital gain tax does not exist in Singapore. So neither individuals nor corporations holding cryptocurrency are even liable. Companies based in Singapore are liable to income tax, okay, if their core business is cryptocurrency trading or if they accept cryptocurrency as a payment. This is what I was saying, like what Europe's doing. They're trying to justify what they're going to do, especially in Germany, if they're going to accept it in payment from Bitcoin. No different than what PayPal, Amazon, Alibaba, what they're trying to create. If you have done this as a payment source, you're going to be as a tax on that, okay? Especially if you're a company. So make sure you know your clarity on that. The authorities consider payment tokens as Bitcoin to be intangible property rather than a legal tender. And payment in the cryptocurrency constitutes barter trade, where the goods and services are taxed, but not the payment token itself. Okay, one more that I'd like to, oh no, there's a couple more. Slovenia. Slovenia is another country that treats individuals and businesses separately under its cryptocurrency tax system. No capital gains taxes levied or individuals when they sell their Bitcoin, okay? Gains are not considered income. However, companies that receive payment in cryptocurrencies are through mining and required to pay taxes for the corporate rate. Token distribution during ICOs is also subject to tax rates up to 50%. That's a little steep, so you have to be careful where your distribution is going to be with the money. Now, it has been reported in 2020, as we were in the big heavy heat of COVID, that crypto communities in the country were working closely with the regulators and taxing authorities in order to bring clarity up to the new tax law. And then one that we definitely set high standards with is Switzerland. It is no surprise that Switzerland's home to innovation hub known as the Crypto Valley. We had Silicon Valley, we had Microsoft Valley over in California, so why can't we have a Crypto Valley? Has moved forward thinking of these tax policies. Cryptocurrency profits made by the qualified individual through investing and trading are treated as a tax exempt for capital gain. This mission was accomplished due to the DLT Act and is now in force. Many thanks to everyone who contributed that they created this innovative legislation where people can move forward with their system for the blockchain. However, income from professional trading and mining is subject to an income tax. Notably, tax laws regionally and annually of the wealth taxes levied on the tax amount and cryptocurrencies owned, along with rest of an individual's net worth. And Bermuda. This is where I'm headed next. So with this company establishment, another type of country that doesn't tax cryptocurrency gains, of course, tax havens where digital assets aren't singled out for special considerations, but which have a blanket of a low tax regime. The island nation of Bermuda is one such territory. It doesn't impose income, capital gains, withholding, or other taxes on digital assets or transactions involving digital assets. What taxes are not to be paid using cryptocurrency? Through October of 2019, Bermuda became the first government to accept payments for taxes, fees, and other government uses in USD coins. So with this, it gives you a full bloom of these attributes of where they're headed with the taxes. According to the Biden administration, which wants to incorporate new crypto reporting requirements in an upcoming $3.5 trillion budget reconciliation bill, okay? This is where the language would acquire for the American cryptocurrency firms, namely the exchanges, Coinbase, Binance, Kraken, Uphold, your US ones where you can do this market, okay? They're showing this, that they would report the data about a non-US user. That information could be exchanged with other countries to make sure crypto traders are paying their taxes. So the US is wanting to regulator, so more people that are going out of the United States. The Biden administration is wanting to regulator this. So if I go, as I'm going to Bermuda to do my cryptocurrency and set up this situation coming after the first of the year, that means when I go and do the same thing over in Malta, this reporting is the connection that wants to be with Biden, because I'm still a regulator of cryptocurrency in the United States. I still am a taxpayer of the United States government because I choose to hold my US citizenship. So the reconciliation of the bill is not to come in really, I guess, to say, tax me on it, but to be able to know that if I'm going to have, let's say, $100,000 in my crypto, let's just use a Bitcoin as that source in Bermuda, the taxes of this as a capital gain needs to reflect of what my taxes are going to be in the United States. This is where the dispute is coming, where people are going to have an issue with this. This is the whole purpose of creating the, not volatility, but the securities of where your money is distributed. And let's face it, the Treasury Department is freaking out because more and more, there are 7% of billionaires, not millionaires, billionaires that are distributing their money into other countries. And they're using this as a factor out of that 7%. 7% is a lot for billionaire money. Okay, just think about that for a minute. 3% is in cryptocurrency. Okay, this is a huge number, people. So this is why I say just pay attention, do your reading research, stay alert to this, okay? Crypto advocates have been hoping that the House of Representatives would save them from cryptocurrency tax reporting requirements that deem an after such provision passed into the Senate, the hope is dwindling, okay? The House is poised to pass a bill without any amendments to it. The bill is included for changes to crypto tax reporting requirements that they definitely want to go ahead moving forward with this, and they want to share that this consideration of the Biden administration of $1 trillion is more important for their infrastructure bill. The agreement brought together progressive and moderate Democrats who had foreseen different ways forward for the legislation. The Senate this month passed a bipartisan infrastructure bill back in August that showed that it would fund sorts of projects to the legislators deeming necessary, including bridge building and safe water treatments. I agree that the country needs help in regards to this, and we've let our infrastructure go down in the United States, but at the same time, you still have to move forward of something that you set up for technology. You still have to move forward where this digital world is going. So you still need to share one cut of that pie to work with the Democrats and the Republicans so that they can come to this agreement of what they need to do so that the IRS can get involved with its definition of that one line when you check the box that, yes, I am digitally involved with cryptocurrency and deep into it, and this is where I want my money to lay. They're going to add another line of it of where you're doing it with other countries because they want the countries to report back to them. Is that fair to the other country, especially if they're not doing their capital gains and they're regulatoring what their taxes are going to be? No, it's not, because if I have the account in Bermuda, I am exempt from my capital gains taxes, but I'm paying an income tax for the company that I have because I'm generating money of the company I'm setting up with cryptocurrency. It doesn't give the right for the United States to have a piece of that pie. I need to give back to that cultural country that is allowing me to provide their country where it's establishing the movement of funds. But that's just me. Playing this game, going back and forth of seeing what the Treasury is going to be in taxes, where they're headed with these regulatories, it's going to play into a real huge field. Like I say, this gets deeper and deeper. I mean, I was up for 4 hours last night, and finally I just said, oh my gosh, this is just an endless novelty of where I can go with talking about this. So I've explored myself into greater details. I hope I've given you a little bit of reading research where you want to extend your own reading research to protect your gains of investing in digital assets. Know where you want your balance to be, okay? It's set as a justice system to balance itself, okay? It's got an equilibrium in it. It's your money. Balance it the way you want it to be. I'm Peggy, your crypto gal. Stay tuned with me where I can give you more and more information. Pick out what country you want. Make sure you enjoy it to its fullest, whether it's you're vacationing or you're searching out for that crypto way for you. You guys take care. Have a fabulous day, and I will see you guys really soon. Take care now. Bye.